Welcome, Facebook Live. This is Adam Ashba, Realtor and President of Ashmont Realty, and happy Monday, everybody. And we're going to discuss today some tips and tricks that are all completely legal to help pay down those 30-year loans that most of us, when they get a home, usually do a 30-year loan. Now, pre-predatory lending, 2010, 11, 12, there used to be 40-year loans and even up to 50-year loans in some parts of the country, especially California, because home prices were so high that people couldn't even afford a 30-year loan that was amortized over 360 months. But today we're going to talk about some just basic tips and tricks on how to cut down from a 30-year loan, because I don't know if you realize, or we're going to show here in a second, when you have a loan now, rates are at a historical low, and we've talked about that before. Rates are been hovering between that 3 to 4%, even down into the high 2s on certain times if you hit it right. But we're going to do some basic number crunching on rates, kind of in today's numbers, anywhere that between that 3 and 5%, depending on the day when you check your with your loan officer. And this is going to dramatically help you save, because majority of the money that when you purchase a house, will save for $200,000 on a basic average 30-year loan. You're almost paying $400,000 or doubling. Now, as the interest rates go higher, that amount's going to go higher as well. But when you buy a house, you literally are paying about 2 times whatever the purchase price if you don't pay it off over that any shorter time of 30 years. So let's dive into it right now. Pretty basic stuff, but there's some stuff I think if you just get more diligent with it and understand the math, it really will help you save. Because real estate prices, guys, nationally has gone up over about 15% nationally. Certain areas higher than others. Columbus is a little under that, around 11-12% year over year. But I can promise you nobody got a 12 to 15% pay raise last year in 2020 with COVID. So this is a great vlog on Ashmont Realty Live to help save money, because we're going to need to do that in this period of time. Inflation's getting very noticeable, especially with real estate prices. So first one, this one's pretty basic. Instead of taking and this could go for cars and trucks too as well, guys, but instead of doing a 30-year loan, why don't you do a 15-year loan? Now, this gets brought up a lot with loan officers. Now, some people will say, I can't afford a loan, going from a 30-year to a 15-year loan. Now, what you could do is maybe when you purchase the house, or what you can do is you can get a 30-year loan, but make payments on it almost like it's a 15-year loan. And the nice thing about it is you have the flexibility of if you just money's tight, you can make that minimum payment. That's a 30-year loan. But if you have extra money, make payments towards it like it's a 15-year loan and cut that term down. So I'm going to show you some basic math. I think you're going to be really surprised how much money you're going to save by doing this. So if you borrowed $200,000 on a 30-year loan, again, that's pretty standard, at 5%. Now, 5% right now is a little high, but historically, it's very, very low, right? Interest rates on mortgages have been on a decline since the early 80s, but 5% is historically super low, right? But borrow 5% over 30 years. That's basically you'll be paying on a $200,000 house around $386,000. Okay, now, if you said, you know what, maybe we can afford a little higher payment each month and get that amortized over 15 years. Buy that $200,000 house, do that over a 15-year period instead of 30, your rate's going to be a little lower. I have never not seen this happen, but if you take a shorter term loan, that even goes for a car because the risk is reduced because you have that loan on the books a little less longer for the banks, but they're going to give you a break on the interest rate. So if you take a 15-year loan at 3.8% interest, you'll only be paying $262,000 for that house. Okay? That is a savings of $124,000, which, if you have kids like me, that could probably put 2 kids through college, probably. And not only that, think of the cash flow situation. You'll be paying that loan off in 15 years. So if you have little kids now, you'll have that house paid off before they even make it to college. So your monthly cash flow is going to be greater because you don't have that mortgage payment as well. And not only that, you're just paying obscene amount of interest. All right? That's pretty basic. Some people just can't afford a 15-year loan, but what you can do is go ahead and take out the 30, go on any mortgage calculator that you can find online, and just say, okay, instead of a 30-year loan, let's take our loan that we have now, but let's make it to a 15-year loan for mathematical purposes anyhow. And then whatever that number comes up with, that's what you'll pay each month. Now, if there's a situation in which you just can't afford that money, then that's okay. Make the 30-year minimum payment, and then go from there. So, next tip and trick is make an extra payment each year. Okay. Now, when I say that, meaning be diligent about it, I think a lot of people try to do this in January or December. That's a hard time of year. It's slower. You got Christmas time. You have kids, and money's a little tight sometimes around the holidays. But make one extra payment a year. Okay? So if your mortgage payment is $1,000 each month, and you pay $12,000 a year on mortgage payments, okay? Instead of doing that, make $13,000 worth of mortgage payments. All right? By doing that, and you do it at the very beginning, you could shave 3 to 5 years, depending on your interest, off your loan by just making one extra payment a year. It's unbelievable. Do the math if you don't believe me, but it is. It's just that one extra payment, and you can do that. You might, depending on what type of business you're in, if I'm in real estate, maybe the spring and summer is the time you do that when you have more of a money windfall. Okay? So make an extra payment one time a year, just one time. All right? One of the last tips and tricks that you can do is make a little extra on your house payment every month. Okay? So if your house payment's $1,000 each month, make $1,100 each month. So instead of getting pizza twice a month, maybe apply that to your mortgage. So if you think about it, an extra $100 a month towards principal, okay, so anything you pay over your allotted minimum payment, you could apply that to principal. Now, you might want to make sure that your lender knows that you're doing it, or specify, hey, I'm paying you $1,000, but this extra $100, I want it to be knocked off my principal payment. Sometimes you have to let your banks know that you're doing that, but go ahead and do that. Make an extra payment, and you do that $100 a month for a year. That's $1,200 extra dollars off your principal. And in 5 years, you're looking at $6,000 less on your mortgage. Okay? It doesn't sound like a ton, but the interest at 5% on $6,000 over 30 years, that's significant. You might be talking $12,000 to $15,000 in savings. If you took $6,000 and amortized it over 360 months, remember, you're doubling that number at 5%. So you do that month after month, year after year. It is significant, and that literally might be just an extra $100 or $200 or $50 or just anything. That'll really, really cut down on the interest, because that's the key here, folks. It's the interest and the length of time that kills you in the mortgage business. That's what makes you a slave to those types of loans. Okay, so if you can afford it, get a 15-year loan instead of a 30. If you can't afford it, take the 30 and then just do it yourself. Figure out how much it would be if you had a 15-year loan and try to do that every month so you're making extra payments on top of your minimum payment with the lender. You can do that. That's totally fine. But then if there's a month that money's tight, Christmas time or slow time is season, if your business is cyclical, then you can go ahead and just make your minimum payment so you're not in trouble. You're not strapped. The next thing is make an extra payment. All right, make an extra payment each month and each year. All right. Okay. Well, if you have any other questions about the real estate industry or questions about loans, let me know. I'd like to hear your comments below. We'll post them. Happy to answer any questions related to real estate or how it affects you. But this is Adam Ashba, broker and realtor of Ashmont Realty, and we will see you next time.